Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Hello. Good morning, guys. I'm your host for your Finance Fridays for Wealth Coffee Chats. My name is Brad. Welcome along. So we got a special guest today. I'll introduce him in a second, but what are we talking about tonight, guys? Or today, this morning? Good Lord. Did I have enough coffee today? Goodness. Well, if you haven't grabbed yours, get on it because I need some support here really, really quickly. So what are we talking about? What if you are wanting to tap into your equity to buy your next property, but maybe want to wait a little bit. Maybe you're not sure. Maybe you've got some constraints that's holding you back from doing it. Well, what we're going to talk about today, folks, is deposit bonds. And I've got a host or a co-host with me today. His name is Niraj from Deposit Power. And boom, here he is. Hi, Niraj. How are you going?
Good morning, Brad. How are you? And good morning to everybody else.
I'm doing all right. And I really appreciated you coming along because honestly, I've had this question approached to me a couple times this week. I don't know if it's just the universe telling me that this is something we need to talk about, but it is here. We're going to talk about it. We're going to unpack it and we're going to see what we can do to help people wanting to get into the next property, but are a little bit hesitant. And you know what? If you don't mind, Niraj, just give me a little bit of background about yourself, what you do, what your role is.
At the moment, I'm with Deposit Power. I'm the head of sales, and I have national duties. But my majority of my focus is Victoria. That's a very large state, and a lot of opportunities for us at Deposit Power in terms of clients buying property markets. Our largest bond market is New South Wales, where we have a full team. We have 3 others just like me up in New South Wales, plus our CEO sits there and the rest of our underwriting team, and above that, all our head office. Overall, Deposit Power and our, as I call it, brother or sister company, depending on who asks, Asset Insure, together we probably have 400, 500 staff. So,
wow. You said something that I thought was a little bit funny. I'm not sure if there's anybody just quite like you in the other states. I've gotten to know you. We've actually met at a gala dinner maybe a couple months ago. We started talking and got a pretty cool, interesting background story, but we'll save it for now. I just want to give a quick shout out to some of the people that have joined the chat room. Good morning, Sharon. Good morning, Jeff. Good morning, Brian. Appreciate you guys for always jumping on and being active in the chats. Guys, this is an opportunity for you to jump in, ask questions, and I'm going to really unpack some of this information that Niraj has got for us. And what you might be wondering, I know I was when I first heard about this, is what exactly is a deposit bond? And if I can ask you, Niraj, what is it?
um, it's a simple product. It's a simple, but sometimes if what you don't know, you don't know kind of thing. And so when we try to explain it to anyone, it could be a 10-second explanation or a 40-minute explanation. It depends. So I've always been trying to crunch it into an elevator speech. And I think the best I've got so far is a deposit bond is a convenient alternative to the traditional security deposit on a property. So we used to use words like it's an alternative to cash, but it used to confuse clients to thinking it is cash. So we no, it's a security deposit that buys. It's the same thing as buyers when they need to pay a deposit. The deposit acts as a security and pretty much make the buyers enter the game. So when making an offer or signing a contract to sale, traditionally you'd make an offer and put down a 10% cash deposit. What a deposit bond allows you to do is put down a security equivalent to that amount that you were going to put down as deposit, but it's in the shape of let's call it a certificate, albeit an insured and a very, it has a value, and that's used by the seller to hold on as security until the client, the buyer, which is usually at settlement, pays that money to them that they owe them. Yeah. So basically, in simple terms, is I want to buy your property. I don't have the money with me right now, or I'm holding it back. Would you accept a deposit bond as a substitute? It is a secure document. It has the same value as me giving you cash, and I'll pay you the money by settlement. So what it does is it enables you to hold on to your equity or your cash position or your cash flow till settlement. Or allow you to unlock your equity, give you time, buy you time. That could be because you're selling your house to buy the next property. That could be that the client is borrowing the money. And in the process of borrowing the money, they found the property they like. And that's the kick. So when you like your property and you don't have the means to put down a deposit, what do? Do you put yourself under pressure, or do you find an alternative that acts the same way? So we act the same way as a deposit, basically.
No, thank you for that. I mean, sometimes clients get a little bit desperate. I'm like, okay, well, how am I going to get this property purchase? Like, I see it, I want to get it, but maybe I'm just not ready for it right now. Maybe I need to adjust some things in the background. Maybe I've got the equity in my existing property. But what I want to do is not tap into that because I've got to get X, Y, and Z sorted out in the background. Which then leads me to the next question. And you've kind of tapped into it a little bit, but what, as a property investor, why would they want to use a deposit bond? How does it help them?
Look, I guess I've had a think about it instead of just because normally you just rattle it off kind of thing. And I'm using some of my own experience. I'm an ex-banker as well, so I used to have to deal with a lot of prospective buyers and especially investors. There's several ways for an investor to leverage. It increases the investor's purchasing power. So what I mean by that is it allows the investor to free up their cash or their equity, but not in the way they think. What it allows them to do is use that, if they're using a deposit bond as a means to buy property and secure a property now, so that they can settle somewhere in the future. A deposit bond is still unsecured. We don't actually take any collateral or security position over anything that the client has. Obviously, there's an agreement from the client that we get that says that this money, once you buy the property, you actually owe that deposit to the purchaser, to the seller. So if you don't pay them that money, we'll have to pay them that money. So that is our promise to the seller. And there's means and ways to execute and get our money back. That's nothing to do with security. What I'm talking about is if a client uses a deposit bond, they can still leverage their equity and invest in other opportunities. They can still leverage their cash and invest in other opportunities. And in our banking days, that's what we used to say to our clients. Hey, use a deposit bond, and why don't you put the rest of the money in managed funds or term deposits or something that will give you a good return. And that is obviously also based on the cost of a bond versus other opportunities as well. So which I'm sure you'll ask.
Well, it's a good question, because for us as mortgage brokers, what we try to do is we try to make sure that the client has options. We've got to first understand their needs and objectives. But sometimes what the difference between your everyday mortgage broker and then what we try to instill in our brokers here at Positive Money is we need to really fully grasp what they're looking to do. Because what you've said is super important. What is the cost and what is the benefit? Right? We've got to weigh that out. Could you be leveraging your money elsewhere?
Yes.
Maybe you need to hold back. Maybe you need to wait a little bit.
Correct.
And what I might do is, Brian's raised a question, and I'll read it to you if you don't mind.
Yeah, go for it.
Pull it up. It may not pull up the full amount. Oh, it did. Cool stuff. Sometimes we're a little bit limited on what we actually get to see if there is a little bit long. So if you're looking at an off-the-plan purchase in the next 2 to 3 years, would a deposit bond be worth it? So you can leverage your money in other properties and use future money to secure your off-the-plan. I think you kind of answered that in a nutshell, but just recap on it if you wouldn't mind, Raj.
Yeah, absolutely. Well, what it is it's cash flow management. So it allows an investor to preserve the available cash or equity for other purposes. So by using a bond, you're actually managing your cash flow, your investment, your money. And best example I can give you is a real example is I used to get clients obviously buying property, and they'd have these goals and ideas of wanting to buy 3, 4, 5 properties, they're causing bankers sleepless nights sometimes. And our goal was, and same as Positive Money, is how do we get them there? How do we help them reach that goal? Because every goal is possible, especially with the tools of finance we have these days. So I used to have, let's say, a client who owned a property and would drive around looking for another one to invest in. And she wouldn't tell me when she's buying. That was the thing, right? She would just drop it on me on a Monday when I'm not expecting it. And she'd be like, I guess what I did on the weekend. And I'm like, you wrote a check, didn't you? And I'm like, my nightmares begin as a banker. Like, after
Niraj, I'm going to pause you right there. Folks, don't do that. Please don't do that. Please don't do that. If you want to know, ask us first before you do it, because it's better It's better for you to know.
Correct. Yeah. And so discover deposit bonds in banking, because banks use them too. And so I realized that while she has equity, she's actually, without knowing about bonds, was leveraging off the equity, because she's like, oh, he'll fix it. and basically, so every Monday or Tuesday, she'd ring me and I'll be bond prepared for her, because you can prepare a bond before they actually buy something. And I'm like, just please tell the agent not to cash the check. And so, but eventually she got the gist of it. She'd tell, when she would go to auction or make an offer, she'd tell the agent, I'm going to give you a bond on Monday. Okay. So, my banker will get you a bond. So what she ended up doing was, by 2.5 to 3 years, she had, look, this is a different tactic. I might not be using the best example here. She used to flip properties. So she'd leverage, buy, come back to me, have a 90-day settlement. Then I'd organize the funding. And then she'd settle that and start looking for another property. Yep. And the reason I'm using this example is, in 3 years, after doing all that and obviously smart buying, she ended up owning a property in Mount Martha and Kooyong outright. So that's the leveraging of bonds, time, because bonds is all about timing, when to buy property. And that's the other facet of why investors can leverage bonds, is bonds are approved the same day. So literally, you can approve it within 15 minutes to about 2 or 3 hours. If it's slightly more complex, let's just call it a whole day. But it's never like 2-day approvals. It's always same-day approvals.
Which leads me to my next question then, Niraj, is like, what are the requirements for servicing? Like, how do you get an approval for a deposit bond? What are you looking for?
So basically, and just moving back one, I obviously gave an example of a short settlement cycle. But the client, what her end game was, she bought 2 off plan. And so in between the flipping, she was actually accumulating funds. So when the off plans were ready, so that was a brilliant strategy. And that thing with off plans is we have 2 cycle bonds. One we call short bonds and one we call long-term bonds. So short term is up to 6 months, which is your typical settlement, 30, 60, 90 days. The cost of that is 1.3%, one-up fee. That's it. The cost of a long-term bond, which goes beyond 7 months upwards to 6 years, is 2.9%. So that's what I meant by, opportunity or cost and obviously investing. So 2.9%, there is like a lot of alternatives to invest your money in, basically. And also, you don't have to leverage off debt, because debt could cost you 5 to 6%.
Yeah.
Whereas a bond costs you 2.9. So there's your opportunity already that you're gaining. So I just thought I'll mention that. And that's I guess, especially with positive money, there's a lot of your buyers who buy long-term with a long-term goal and strategy to invest. So one of the ideas of that is the leveraging of the bond is an alternative to invest somewhere else, or in fact, just save money. Hold on to your money. And the third factor is when you're buying property, you're not risking your own money in case something happens to the developer. Yep. What we're doing is just putting a bond as security. So in relation to that, how do you get a bond is quite simple. All you do is basically, I'll use the long terms first, because that is positive money's sort of majority type scenarios. So with off plans, because they're longer term, our assessment criteria has to be based on risk. Who is our riskiest client? Who is our non-risky client? So our non-risky clients are clients who own property. They already have property. They've already gone through certain disciplines in life, loan repayments. They have good equity in their property. So those clients, when they buy off plan, let's say they need $100,000 deposit for $1 million purchase. What we look for there is, do they have $100,000 in equity? So it's not a huge demand. And then what we look at is how far the cycle goes. So if someone's buying a 2-year bond, for example, because the settlement's in 2 years, then what we need that client to have is 2 times the value of the bond as equity. So 100,000 bond, they'll need 200,000 as equity.
So if I'm hearing you correctly, Niraj, so depending on how long out off the plan is, it'll dictate what you're looking for from a servicing perspective.
Correct.
But
correct.
Ideally, it all comes down to your equity position. So
100%.
say, for instance, you've got a client that right now there's some things in the background that they need to sort out before they can actually tap into their own equity, because they're going to need to tap into their equity eventually, right? They're going to need to do it eventually to pull out money to pay for the deposit, because all the deposit bond is doing is holding your spot.
Correct.
Right? So what you're doing for servicing is we're taking a look at the property 1 year, 2 years down the track and say, okay, well, if it's 2 years, it's going to be X amount of equity that you need to hold in existing property.
Correct.
So I'll give you some time to really sort out what you need to in the background, if that is your situation. Or alternatively, you're investing your money elsewhere because you've got the cash at hand ready to go.
100%.
Using it to leverage some other endeavor that's going to help you out in the future.
Yep.
That's fantastic. Now, I know we're a bit short on time, and I want to give some questions to our listeners. If they've got any, to just put them in the chat.
I saw one or two just there on the side. Is bond paid to the developer, and is it accepted by all new developments? The bond is not paid to the developer. The bond is I mean, the bond is always marked to the vendor. Now, obviously, in the development, the developer is the vendor most of the time. But in real estate contracts, which is any standard settlements up to 6 months, the vendor is on the contract. So in case of what we call a claim, we pay, number one, it goes to the real estate agent, not the vendor directly. The vendor is the last player in the game because there's a legal sort of steps, as if cash was given. If there's cash, it follows the same process. So it's not like, vendor goes, bond should be coming to me. The cash wouldn't be going straight to the vendor either. So in a developer sense, the bond is actually payable to the developer's solicitor or legal representative, because off-plan contracts are different to real estate contracts, short-term. They're actually designed by lawyers, and there's some legal sort of background behind it, why, and the lawyers control the money. It sits in a lawyer's trust account. So bond money goes to a lawyer first, who then decides through the legal channels who to partition it to. Is it acceptable by all new developments? A bond is acceptable by all developments. There's a caveat though, the funder. So if a funder decides how the developer is going to take deposits, they dictate to the developer what they want. So
just for clarity on that, so it's the developer's a lender. That's
my apologies. The money that's lent to the developer has certain stipulations on it, because these are a multi-million-dollar funding or lending. And banks are conservative by nature.
Yep, I've had to be on that same side because I used to do development loans, and there you go. There is a little bit of caveats to it, but it is interesting. But what all in all, it's just holding your spot with the developer, right?
Correct.
It gives you some security.
Yeah.
It goes to the solicitor. It's held in the solicitor's trust.
Correct.
It's not actually cashing out any type of money.
Correct.
Hey guys, I have a certificate here. I'm holding my space. Don't stress. You'll get your money. It's how I put it in.
Correct.
In my blonde. I mean, if I had hair, my blonde idea and understanding of things. Again, we are running a little bit on time, and I just want to have one more question asked, and this one comes from Sunny Always. How can we use this facility? Does Positive Money arrange it to the PRE client? And the answer is yes. I'll give you an opportunity to book in with me, or if you've got further questions, to send it on that little bit line at the bottom. You'll see us running an email address if you want to get in touch with us.
Guys, I just saw a question. It's a very important one, I think. If a developer goes broke, all the client has done is paid a fee for the bond, and that's the only money they'll lose. There's nothing else lost. The developer can't claim on a bond if they haven't finished their property.
So yeah, that is a good question. That is a really interesting way to secure your funding. So if something happens, the developer does go bust. But let me tell you guys, with PRE as a group, we do a lot of due diligence with our developers. Yeah. We make sure that they're solid. We don't just get into any type of relationship. Sam Saggers and the team, they do a lot of research on all of our developers. They need to be a profitable business, have experience. They're not just wham bam, thank you, ma'am, kind of developer. We do our due diligence. So I will guarantee you that we try to do our very best to make sure that you're getting into a property that it's with a good developer. Yeah. But yeah, if you're wanting that extra reassurance, by all means, a deposit bond would be the way to go as well. Well, Niraj, I want to thank you for your time.
Thank you for having me.
Fantastic. I love the fact that you're willing to come into our podcast. I know I might have pulled your arm a little bit, but I appreciate it.
No, I enjoyed it, and thank you very much. And it's good to get some insights from clients to know what they're thinking. So it's nice for me to be out there and finding things out as well. So.
No worries. Thank you, Niraj. I appreciate you so very much.
Thanks very much.
Yeah, no worries. Well, folks, you will see that we put our QR code up in the corner over here. And if you want to shoot us an email, if you've got more questions that maybe you weren't able to get to, or maybe you're looking at this recording a little bit down the track, we're always here. We're available. Reach out. We're here to help you guys. Well, if you liked what you've heard today and you've got other questions about finance, again, we've given you the opportunity to book in with myself and the team at Positive Money. We're here to help you guys. So like, subscribe, share this podcast, and you know what? Have an amazing Friday. I hope you have a good weekend. Until next time, guys. Bye.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.